I'm Ali Patterson, and welcome to the FinTech Show. In today's episode of the FinTech Show, we take a look behind the scenes of a bank. In recent years, there has been a change in the way that banks are run. New technologies and a slick front end takes all the headlines. But with the sheer volume of data that banks own on their customers, CFOs and financial teams have found their roles and lives change dramatically. Joining me today is Danske Bank's Soren, who is part of an award-winning team to improve the digital nature of an already very innovative bank. FinTech Financer regular Jim Marous dials in from Ohio, USA, to give his wisdom into the changing nature of back-end transformation. And Aptitude Software's Jeremy Marchant, a company who are 100% dedicated to the finance office and are leading the way in the transformation and modernization of the now critical role in banking, the CFO. There is, a bit of a demand when it comes to the front-end services. I mean, that's kind of where everyone wants to be working on it. It's the it's the showcase thing. It's the element that you can show family and friends, look what I've been working on. Well, why should banks really be caring about investing in improving their back-end systems?
So my view on this is that having a really nice and attractive and easy to use front end is really important. But building a front end is fairly easy if you have the right back end available. And unfortunately, not all banks have that. And it is relatively easy to start a bank today. I mean, if you want to start your own bank, you require, let's say, 20 million pounds. You build a nice front end, and then you buy a bank in a box and you hook it up, and then you're basically ready. But as you diversify your product portfolio and actually need to earn money, let's say offering more complex products, lending, mortgages, then you need a much more sophisticated backend, and they're not as readily available to buy out of the box. So having a nice and well-functioning backend actually becomes a competitive parameter in today's financial society. And I think Danske Bank is very fortunate. We're one of the few banks in the world that have one backend that actually work across multiple geographies. So not only do you use the same backend in Norway, Sweden, and Denmark, you actually also use it in the UK and all the other regions where we are operating. So it's cross geography and it's cross legislation and cross language as well. And that gives us a big advantage that we can develop a solution once and then we can actually deploy it everywhere. And that's a very good position to be in that a lot of banks are actually trying to get to. So yes, investing in the back end is super important, and it's something that we have been doing all along. That being said, we do of course also have room for improvement. It's not everything that is real time and scalable at our back end. So we are constantly working on improving it and upgrading the technology to be what it should be today.
If the back office does not move and does not change, then it does become a brake on the organization. We are seeing huge volume increases because of things like smartphones, digital front ends, digital booking processes. And if the back end isn't revolutionized, then no matter how good the front end, at some point, the back office systems will be a brake on the organization, and it will stop things like new products being launched. We'll have control issues, we'll have limits on organizations being placed by the regulators. So finance has to do something. So yes, the regulator often pushes investments, but at some point, if finance doesn't do something, then the organization will be stopped in its tracks.
So I always feel that a lot of organizations may come unstuck from not focusing on the back end. The wonderful example that was zooming around as a LinkedIn meme was the kit car, effectively a go-kart with a Lamborghini shell. It looked fantastic on the outside, but it was still just a go-kart on the inside. Do you think that the focus and the headline-grabbing elements of the front end tend to overshadow what's actually happening at the back end?
Yes, I think it does. I think on the one hand, the digital channels clearly are important, and they are about driving revenue, driving user experience. And I think that was always going to come first because they are the revenue drivers and they do enhance the user experience in a way the back office doesn't. But at some point, as I say, you have to follow. You can't have a Rolls-Royce front end and a malfunctioning back end. The engine will just explode. And at some point, the organization will just grind to a halt. So yes, I think it was always likely that the front end customer experience would come first. And as a consumer myself, I obviously experience the benefits as much as anyone else. But at some point, an organization has to adapt. And if they don't adapt, then someone else like a challenger bank will. And you'll see those trading volumes and market shares move away from the traditional banks because the challenger banks are able to do it better.
Absolutely. Just on that point around the regulation on the back end, there's constant regulation that is changing and adapting. Do you think that there's almost a slight attitude among banks that as soon as there's a new regulation, that's when they go, okay, let's put a plaster on that in the back end, as opposed to trying to build something that is future-proofed for PSD 5, 6, 7, 8, 9?
Yes, I think there has been a trend, and it's certainly in the last 10 years, where banks in the finance functions and the back office have felt a bit under the cosh. They have felt like there's this constant pressure on them to do more with less. You've come from an environment after the financial crisis of retrenchment and cost reduction, and yet more and more regulation. So, the finance function has fewer and fewer people, more complex organizational structures, and yet a need to do more with what they have in terms of regulation and expectations from the business. And what's that meant is that the desire to articulate that future vision and the digital objectives and opportunities has been less able to be achieved because they've just been so under the cosh. And yet now it does feel like certainly in the last 2 or 3 years, the digital technologies at the back end, in the back office, have become more mature, more credible, more cost effective. And that digital finance vision is one that banks and other organizations are moving into, because they've come out of a challenging period and they can see that there is an opportunity here. So I think that I agree with your statement, but I think the banks are becoming more digitally attuned. And if you look at surveys from the Big Four, from Accenture, the SIs, they all talk about CFOs and the finance leadership seeing themselves now as drivers of digital transformation. So I think historically it's been a challenge, but they are moving into that digital leadership space.
So we've seen a massive amount of consumer expectations change because of the likes of the challenger banks and your Amazons and Googles. And banks seem to be focusing on competing, well, especially when it comes to the front end here. Should banks also be looking at their back end solutions as well?
If they don't invest and improve the back end processes, the way that products and services are built, they're faking digital. And what I mean by that is simply having a digital app, simply be able to check off a box and say, I have digital account open, or I have digital loan engagement. It's not enough. If you're taking 5 to 10 minutes to set up a new account or a loan on a mobile phone, the consumer has abandoned the process. So it's one thing to put it on a mobile app or put it online. It's another thing to do it right. And by doing it right, you make it simple, easy, seamless, and enable the consumer to determine if they want to stop the process and restart it either on the same channel they started or someplace else. We have to avoid faking digital.
I saw a fantastic short video of how big banks do automation and do digital. And it was one of the ticket offices in the underground. But the idea of the clip was to show that you have the ticket go in and they had somebody inside the machine literally grabbing the ticket and then popping it up the other side. Do you think that's kind of the way that banks are approaching kind of their back end? They've got the shiny part where the ticket goes in, but then it's literally manual processes.
Well, what they've done is they've taken the old process and simply put on a phone. In much the same way that ATMs at the beginning were very much like meeting a teller, but just doing it through a machine. It's not about taking what's currently there and just putting on a mobile device or a digital device. It's really about redoing every element. I mean, there's organizations now that we're working with daily. It's 1 click, 2 clicks. Why do we make all of our payments through Amazon with maybe PayPal? It's because we don't have to fill in all the data that supports that payment. People are looking for ways to simplify their life, not to make it more difficult by going to a digital app.
What kind of new exciting insights or even services do you think could be brought to the likes of the CFO or the CDO from increased data visibility and, well, streamlining the entire solutions from back end to front end?
Well, we do have more data than ever, and I think we also need more data than ever. During the last decade or so, we have seen not only banks trying to make their customers go digital, but also customers wanting to go digital, that they're actually preferring to use digital solutions, especially in Scandinavia, rather than going to a branch. Most of our branches today, they don't have transactional services, it's only advisory, so they don't even have cash in the branches anymore. And that means that we don't see our customers as often as we used to do. And they still have an expectation that we know them. And the only way we can know them is by using data. So data becomes a very, very efficient and necessary tool in knowing our customers and being relevant for them and being proactive, being able to advise them at the right point in time. So we can give them the right advice and the right products when they need them. So I think that's probably the most important thing we're getting out of all this data, basically being able to service them despite seeing them. And especially these days where we have the global pandemic, which is also, of course, raging in Scandinavia, less so than in many other regions. But we do have a lot of our staff still working from home. We have customers that prefer not to go to the branch and do things from home. And definitely having the right level of data enables us to service them efficiently. So more important than ever.
Let's talk about data chaos and having wonderful information in one silo, slightly different in another silo, and a lack of a general ledger. What's your approach that you're doing in Aptitude in terms of using technology such as the cloud to have that single view of the truth?
I think there's two things to say about that. I think firstly, you've got to have that single place where the data is. And secondly, when cloud comes in, is about how cheap and available that data becomes. So if you think of the current situation in terms of data chaos, you've probably got the same piece of data that covers the same thing in maybe 4 or 5 different systems. So our typical solution to that is to bring everything together in one place so that finance knows where it goes to get certain data points. And that then leads to the efficiencies that I just talked about. What that means in terms of the cloud story is that data becomes cheaper. It becomes cheaper to access this data. You only need to access the cloud for those high volume crunching of the data at the month end or at the quarter end. So you're not always accessing the data and using your on-prem technology to get that data and support it all of the time. You're only using it at peak times in the reporting period. So it becomes cheaper. And the other thing to say is that it's quicker. You're not having to wait for end of day batch cycles. It's always available. So we are seeing, certainly in the tier 1 organizations, a cloud first choice in terms of their vendor technologies.
Absolutely. And I also imagine there's security implications about that because, for example, with all the best will in the world, you could be, you can't really, well, you can, but you're going to struggle to outspend Amazon when it comes to defending the cloud.
Yes, I think, risk aversion has been a bit of an issue in some industries. Some industries are further ahead than others in terms of moving to the cloud. But yes, as any organization, are you going to be better at managing your data and your security than Google or Amazon? I think we know the answer. Probably not.
Looking at the back end, can we talk a little bit around cloud computing? Because it seems that back in the day, a bank, you would have a nice mainframe computer in-house, a team of programmers all in-house. But what has the cloud really enabled on the back end of a bank's processes?
Well, a lot of financial institutions really hesitated to get involved in the cloud because they were worried about security and risk and all that. Now the cloud's almost required because you need to process so much more information. to truly move the customer experience up the ladder and to take data and personalize the experience on a customer level, you really need cloud computing to do that for you. Now, the good news is the cost of cloud computing has come significantly down. The security around cloud computing has gone skyrocketed. It's really gotten much better. And there's options as far as how you want to engage in cloud computing. I think what's important also, there's providers out there that now have built specific cloud solutions for financial institutions. You can scale it. So if you're a smaller organization, you don't want to do it all at once, you can do a small part of your processing on the cloud and get comfortable with it to move forward. You know, the options are endless. And while, just maybe 2-3 years ago, it'd be a risky proposition, it's no longer a risky proposition. In fact, it's no longer optional, it is required.
Got to talk about cloud. Got to talk about cloud-based technologies, especially when it comes to digital transformation. How critical is the cloud for when it comes to this?
The scalability and flexibility that a cloud provides are unparalleled to any other technology. I fully believe that. It's not everything we have that runs in the cloud. We have private cloud where we run some payloads. We have all sorts of technologies that we use in Danske Bank, and what's really important is to use it efficiently. So what we try to do is that the technologies that are not running in the cloud, we make sure to API enable those so we can actually efficiently communicate across all our different capabilities, microservices, make sure that we have an efficient platform, and then constantly working on upgrading the different parts. It's for sure that when you're a big financial institution, you will have some solutions that are not using the newest technologies, simply because you have thousands and thousands of programs, and just upgrading them would basically keep the whole company occupied for years. So you'll always have some legacy, and it really becomes a question of how you manage that legacy and how you make sure that when you build new solutions that you use new technology. So of course we are using cloud technology, and it helps with improving delivery capabilities.
There has been a slight trend, particularly with some of the larger banks, of looking to build, mostly internally, their own data warehouse and to store everything there. What are some of the issues that come around this, and what are some of the pitfalls that it might introduce?
That's a very good question. And clearly I'm not the only person in the industry who can talk to this, because a lot of banks have had their fingers burnt in trying to do this. You look at some of the European banks in the last 10 years, and a lot of money has been spent in trying to build data warehouses to solve this problem. So the pitfalls are things like, poor ownership for data, bad governance, unclear objectives, overcomplicated projects, trying to be too ambitious, and a lack of accountability for the original business case as to why the whole project was being done. So you've ended up in a position where a lot of money has been spent and you haven't got that much to show for it. So, our argument is always, well, number one, you've got to have a very clear sense of the business case and what you're trying to achieve. But also, a data warehouse isn't the ultimate answer. You've got to fix the data creation and quality issue first. And one of our clients refers to it as a clean room. A data warehouse should be a clean room. Don't put all of your data in there unless you're happy with it. Fix it first. So a subledger and an accounting rules engine, certainly for the finance data, that's the first step to do. Get the data, or find out data what you need, get that data and create it in a way that's clean and controlled. And then once you have that, then certainly put it into a data warehouse along with other data that you want to have, and then you can consume it until your heart's content. But don't start slinging loads of data in a data warehouse in an uncontrolled way, because you will fall down those pitfalls I mentioned just now and end up with a project that everyone just suddenly forgets why they did it and what value it was delivering and where the money went. And in a leadership situation, you don't want to be in that position.
What are some of the things that you guys at Aptitude are doing in the way of automation to lower this down, to bring in as much automation as possible to free up enough time for the finance department?
Thank you. It's a very good question. I think I'd almost actually, first of all, go back a previous step, which is that cost reduction and efficiencies is normally the number one way in which our projects get approved. It's about the business case for change. And yes, you get all the value add stuff about, more granularity, more reporting and quicker, but it's cheaper, right? So automation brings more efficiencies, and that is the number one way in which our projects get approved. So how do we deliver that? Well, if you think about the current state of the architecture, you've got all these fragmented systems at the front end. You've got data all over the place, data chaos as we call it. And what does that mean? Well, that means you have umpteen reconciliations. You got to keep everything in line. You've got manual journals everywhere, trying to keep everything in line. You've got people checking things, doing analysis, understanding why numbers are different. So essentially, you've got a whole army of people doing manual processes. And if you are able to automate those, then all of those people can stop doing that and do something of more value. There's always a back book on a CFO's agenda for other stuff that they want their teams to be doing. So by automating all of those processes, you can free up those people. And we've seen, clearly there's a range, right? Because it depends on how bad it is in any company of ours, any client of ours. But we see a range of between 25 and 40% of efficiency savings in the finance teams. So in one organization, we saw about 30 people, essentially what they did just didn't have to be done anymore. So they can all move on to other things and deliver projects that were just in free fall before. So, it sounds like a boring topic, automating a reconciliation, but in a big organization, this can be big numbers and big savings on the cost line. You're looking at multi-million dollars of savings and payback within a 2-year period. So yeah, it's a big reason as to why people go with us.
Jim, can you tell me what streamlining or automating this data can do for CFOs, finance departments, and ultimately their customers?
Well, you end up being able to serve a broader marketplace without segmenting them, but actually looking at them as individuals. You have the ability to look at data. For instance, in every country, financial institutions gave the ability for consumers to take a pass on their loan payments for a number of months and actually extend them to the end of their loan. Financial institutions, when they look into the data, have to determine, is this consumer not making their payment because they would be kicked out of their home because they couldn't make their payments? Or did that person make the decision, I'm going to forego my loan payment so I can put money into savings, so I have a better nest egg in case I get laid off, in case something changed in my life, because I had no savings before this. So delaying my loan, it's a loan that I'm probably never going to see the end of that loan term anyway. So why don't I just use the forbearance to build a bigger savings account? Those are two vastly different consumers. But financial institutions now have the ability to look at that data or to find out what else is going on in that relationship to say, what is going on? Oh, and by the way, why do I need traditional credit bureau information when I should be looking at rent payments, utility payments? Maybe, how long have you been with my financial institution? And what if your transactions look like? Are you really going to go bad on a loan? No. So it's that kind of data, that kind of insights that have to be at the access to the financial officer, but most importantly, not just to say, oh, we know this, but do something about it. Go to the consumer that's saving money and say, hey, by the way, we've been seeing that you've taken a pass on your loan payments. We believe you're putting most of it into savings because we can see how your savings have grown. Can we help you with new savings plans? Can we help you with an investment plan that can help you going forward? It's taking that insight and being the financial concierge, pretty much like the hotel concierge helps you at a hotel find entertainment. Well, a financial concierge should say, you know what, we started to understand how you bank. We can help you. It's why, for instance, that I had signed up for Acorns a little bit over 2 years ago. And Acorns takes out money on an ongoing basis without me knowing about it. They tell me about it, but when they see my funds being a little bit higher in an account, they take it out. I keep on replenishing those funds without realizing I'm replenishing, in some cases, my savings. And the fact that it's taken out automatically in the last, 24, 28, 30 months, I have $22,000 in my Acorns account. It has astounded me. It's growing really rapidly. And I'm not made of money. I'm not making a lot of money. But the reality is, if you can take it out without me knowing it, I'm just not going to spend it in different ways. And all of a sudden I have a savings account. I want that painless financial solution.
That's all we've got time for. I hope we all leave with a bit more appreciation as what finance and digital departments have had to face over the last couple of years. As always, you can catch the rest of the series and more at fintechf.com.